The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 30th day of December. It was just a little while ago that I was saying, wow, the year's almost finished. Well, you want to know something? Gosh, tomorrow the day will be finished. The week will be finished, or at least the part of the week that counts in the charts. And most importantly, the year will be finished, and it's been quite a year. Right now, we're seeing somewhat of a decline in the Dow. First time we're looking at a red candle on the E-mini. Look at this. E-mini is very interesting. E-mini is making, potentially, it was 25 cents away of extending leg C at 2,088.75. The high today is so far 2,088.50. So, by 25 cents, it looks very much like it's making a peak C here. In the channel wave squash formation, the stochastic and MACD are suggesting that you get to peak C, and then the stochastic starts to pull back, and the MACD's fast-moving average, that green line right there, the left side chart right here, that starts to take over for holding up the momentum. And that says that 2067-ish is the 9-period exponential moving average. Very strong support. It might not even get there before it tries for D. But in the meantime, back at the ranch, and this is going to be very interesting, the S&P has only made a leg A, and today, in fact, could be the peak A if it doesn't make a new high, which looks tough to do. But this is the chart that fascinates me. It's the weekly chart of the E-mini, and it's the same with the S&P, same with the Dow. This is a leg B. And what's fascinating about this particular chart is that Chapman wave up channel and inside track resistance area. Remember, this is something I discovered a long time ago. I've been talking about it ever since I'm here at TFNN. So it's about over 11 years. And that whenever you get into that inside track, that's where the price can be repelled. And yep, right there, it's getting tougher and tougher to break out. I think it will break out. I think that we're in for a choppy little ride between now and the second week to third week of January, based on the charts that I'm looking at, based on the weekly charts in particular. And if you're looking at this 120-minute chart here, the monthly chart doesn't really work because there's not enough data. That 2,088.75 is the top part of the rectangle formation, and 2,076, as I said to my subscribers this morning, 2076 will be the bottom part of this particular pattern. And as we're looking at it, what we're really going to have to decide, we've already gone just at 25 cents under the 2076 level, is this going to be just a brief 1 to 3 day pause, if even that, and then we make higher highs? Or are we going to pull back suddenly? And I'll explain what I'm thinking here. And tonight, let me just go through this one more time. Let me just see if my charts are up here. It's easier to do this than to actually talk it out. Yeah, so let me go to this particular chart, and then I'm going to move it over. Have I got it still? Yeah, there it is. So here we go. I'll put this tonight at MIT, Massachusetts Institute of Technology. I'll be the guest speaker for the Boston Investors Business Daily Meetup group. Formerly, yep. And as the Boston Investors Group, they are celebrating together with the IBD group this evening. It's the annual holiday party meeting. I'm the guest speaker. I love doing this, and we go until the lights get shut off at 10 o'clock. So it starts at 7, and there's a party. If you want to bring something, that'll be very nice. You don't have to, but it'll be great. And Jeff organizes it. Really does a fantastic job. Really has him and Mary have just pull this whole thing together over the years to make it. I mean, we get, I don't know, maybe over 60 people at these bigger functions, bigger events. So I'm looking forward to it. And it's at Building E51, room 315, 70 Memorial Drive, Cambridge. It's actually the corner. Oh, it's right at the corner of I know the name so well because I keep having to do this. Anyway, it's not on Memorial Drive. The building itself is, but the actual entrance that you want to go to is on the corner away from Memorial Drive. You know, Memorial Drive is that beautiful drive where you overlook Boston. You can see the gold dome of the State House in Boston, Beacon Hill, etc. Well, that's where the beautiful view is, looking across to Boston. Anyway, so we're on the Memorial side, and it's on the parallel street on the corner. You'll be able to get in. There's plenty of parking around there, and I'm looking forward to seeing you there. So, and just go to the front. Go to Boston Investors Group. Check it out. You can go to the just Google it. That's the best. Okay, let's get out of this. Yeah. Now let's continue. So I was expecting that we would get peak A in the S&P today. So let me just run the numbers, and then I won't have missed anything. The Dow itself. Can you make it larger? Sorry, I couldn't make it larger. But if anyone wanted to grab that, you could grab that and just blow it up. Now, I gave all the information. Now, what we're looking at here is in the S&P, right here, SPX. No, I'm going to do the Dow. INDU. So we'll go in order. Why not? The Dow's made a peak A from yesterday. Now here there's a mini inside track resistance level. I got to watch this closely because there's also a rising wedge formation, and usually you make a cup formation there. I'm anticipating the Dow's at 17,981 down 56. I think we can get into the 17,920s. The 17,898 is the 9-period exponential moving average. It could even be a little bit deeper. I mean, we've had a fantastic move to the upside, all the way from the 17,050, what was it, 17,067 level made on the 16th of December. So now look at this. So I'm anticipating what I drew for my subscribers in my daily call, it's called the opening call. I drew this in. I drew it in, and I said, that's what I'm expecting. I drew it in 2 days ago. I said, that's what I'm expecting, a pullback. And then it's possible, depending on how we close, that we start underneath that A, we start another A, and then another B, all underneath 18,103, and that goes to C. And that way you're starting to play catch-up to the Qs. I'll go through that. But in the meantime, back at the ranch, 93% for the stochastic. I'll be talking about these things tonight. I'm going to be giving overviews, all sorts of things. And of course, all your questions are going to be a lot of fun. I'm really looking forward to it. This and the the New England Auto Show, which comes on mid-January, are the two exciting events that I'm looking forward to. One is because tonight I'm going to give some aspects that I've just begun to discuss with my opening call subscribers, and I'm going to get into more detail with charts and stuff over the coming week or two, what I'm looking at for 2015. I don't usually do this, but I am going to do it this year because I think I'm getting some clarity in my mind as to what's going on. That's not to say it's going to be right. It's just going to say that that's going to be my template that I kind of use as a background noise and then filter it out. That's number one. Number two is I'm looking at real estate. I'm looking at all sorts of things that are going to happen in 2015. I'm looking at bonds. I'm looking at the dollar. The dollar is just making leg D, making a probable peak D in the next day or so. That allows gold to rally. A whole bunch of things are happening right now. So this is a very exciting period. And I really am looking forward, and I believe that the auto show this year, last year I said it'll be the most spectacular show in the concept of quality and how United States is finally getting onto the bandwagon producing much better quality. They still do. When I say dumb, I don't mean dumb. This is not a derogatory term. It's just way too polite, dumb. To have Ford mess up on that infotainment or whatever it is, and still be behind the 8 ball is beyond my comprehension. It is just, I cannot believe it. To have Cadillac still not getting even close to the quality of a Lexus. Oh, what a Lexus. It's not even getting to the quality of mediocre cars as far as the Consumer Reports is concerned. I cannot believe it. It is inexcusable. It is I'm getting off on a rant here. It is as inexcusable as when back in the 1980s, 1990s, I was decrying and yelling and screaming about the plastic parts that we're using for engines and how the accountants were running the show instead of those beautiful designers. All right, I'm off that. I'm back, and we're going to continue with the market outlook. So that's the Dow. I'm looking for good 17,800s. If it gets there, low 900s, 800 support, then a rally, and we start to make higher highs. And that's what I'm expecting in January. I am anticipating that sometime towards mid-January, I'm not sure, it depends on the weekly chart, that we will see, and now this is interesting because the Dow is in leg C, maybe peak C, in the weekly chart. So, and let me move this away now. We don't need these. And this is a spectacular. This is the 43rd month, and I believe we will go to the 44th month in the monthly charts. I'll talk about this tonight. Extending, and that means we haven't got an exact price match, time match with the move that was in October of 2007, when the Dow at 14,198, pulled back sharply to 64.69 March of 2009. Remember, that's the day we got that buy signal. And then it went on to May of 2011 to 12,876. So that particular 43 month top, low, top is now being matched by top, low, and now we don't know if we've got it, when we're going to get a top, because this is the 43rd month, and the weekly charts are suggesting that we should go higher in January. You just need to go 1 penny higher on the first day, after the first day of January, after the first day of December, last day of December, and then you've started a new monthly bar, a continuation pattern. So this is very interesting. All right, let's just back to the story. SPX, and I'll talk about the VIX and other things that I was asked to talk about. See, that's a peak A, almost certainly today in the S&P. There's a good chance that it won't even get to 2072, the 9-period moving average. I shouldn't say there's a good chance, but the stochastic indicates that at 95%, there's a lot of buying pressure there. And the 120-minute chart, peak A, B, C, D, E, peak E, and it's pulling back. And it says this whole area between 79 and 2076 should be very good support. Yeah, it might not make it this time down to that 9 EMA. Okay, so the monthly chart leg B, weekly chart leg B, and it's got a lot of resistance to the 2100 for the same reason that does a lot of support, resistance in the 18,420, 380s to 380s. Somewhere around the 350, 380s at this particular time. So now what we're looking at, let's go on to the IWM, do that quickly. This is only peak B. If there's no new high today, it's gone to a new all-time high, and that says it's leg C up in the monthly chart. That's the way I'm going to have to count it, and it's leg C in the weekly chart. Wow, a break coming up. I just want to talk about the dollar as we go out to the break. DXY, of course I'm not going to get it, DXY, there it is, I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and I just wanted to touch on a couple of things. One very important aspect has been I get emails very regularly about what do we do about our 401, whatever. Long-term positions. Doesn't matter whether it's an IRA, doesn't matter whether it's a college fund or whatever. What do we do with our long-term? Is this the time to be making changes to any long-term positions that we have? And I must tell you that at this particular point, I still believe we're going to higher highs. I still believe that even though the scenario I'm looking at says that sometime maybe late January, I'm looking at the New York Stock Exchange right now, it is under its 11,008 all-time high. All I can tell you is that if it goes to 11,109, I'm not going to call that G. I'm probably going to be calling it, if it's next month, which will have to be, I'm going to be calling that new leg monthly C. It's just the way I'm carrying it. I've got an F, but it's an F/B. There was that was the deepest correction from 11,108 down to 9,886. I mean, that was big for this particular $1,850 number, New York Stock Exchange, very broad index. No, and I've got a left side, right side price time match, which says in time, not necessarily in price, but in time it should take 11,108, but in time it says that the week of the 30th of January will be really critical. So I just wanted to quickly see if the questions over there. No, and any questions over there? No. Okay, so let's continue. So the New York Stock Exchange. Now, what I had said as we were going to the break was the dollar is in leg D. But the stochastics at 91, the MACD's pulling back. And so far, the market and the dollar have been in unison. And I like to look at things and say, I don't normally put stock into, or credence into just parallel movements. That could be coincidence, and look at the counterpoint in gold and the dollar for so long. But there are periods where for 8 weeks, 6 weeks to maybe 8 weeks, they can go in unison in the same direction, maybe not to the same extent, but they're going in the same direction. However, in looking at this particular monthly chart, that is well, the weekly, this is the middle one is the weekly, and the monthly chart, these are moves that you see sometimes in a stock. You don't usually find them in indexes. That's number one. But when a currency is in favor, as it was when it made 70.70 a low in 2008 in the index, and soared to peak A, then B, and then C, all the way to the high of 89.62. So that is 20. So let's call that about 28%ish, something like that. That is, I look at it this way. I look at it as if this is where not just institutions are involved, countries are involved. That's why it gets that kind of power. Now look at the move that we've made from the 79 level. 79 exactly was the low in October of 2013. Now we've gone to a slightly lower low at 78.91. So that negates the one. And I've been toying with this whole idea all the time of saying, should I count that as a monthly chart of an index, which is a derivative of the real thing? Is that really a legitimate new trough, or is this really part of maybe a double bottom so that you've got at least a leg B here to move along? And then I decide, you know what, I don't really care, because G is very negative, could be very negative, A is extremely positive, and I'm looking at the MACD and the stochastic in the monthly chart, and it's very positive. I don't have to make these decisions based on a monthly chart yet, so I can still keep that in and just say that the weekly chart is has been extraordinarily strong. It's moved together with the general market, so it's a coincident indicator. And as long as it's moving in parallel motion, it means just there's a heads up. You've got a leg D. Is this, here's the question I spent some time with last night. Is this leg D, or was that a peak G in the daily with the head of the stalk leg formation? The peak comes down. That would make the most sense. And actually, I should have put that in. I'm sorry. I should have put it in and made it very clear. And put this in as leg D, a continuation pattern, or a brand new leg B. And my inclination, that's why I spent some time on this last night, is to call this D/B. That means that the gold rally that we're looking at right now with the GLD up $1.83 at 115.50 is just a bounce. And it fits exactly into the framework that I've been looking at for a while. Hey, I'll be back. Basil Chapman, Tiger Conditions Hour, and Dow's down 52. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So here I have, hi folks, we're back. Here I have the IWM, the Russell 2000 iShares. And there's that pattern that we look at so often. This is the leg. Yeah, we got it. Let me just put it in. Leg. Chapman wave stalk leg formation. Here's the old body. And then we will expect that the neck starts over 120.97. And we're already there. So this is already starting the neck, and it means that we're in leg C. And that's the way I'm counting it for now. Why? Because there was a Chapman wave instant restart in the monthly, and this is an evolving process that I started 30 years ago. And the question that I'm being asked in the den is, why is this not a peak F right here with a down arrow at 120.97? This is a brand new leg A. It certainly could be. But the first thing I need to do is to be very conservative, and I go backwards, and I say, no, what could I have missed? Well, I didn't really miss it. I put it in. That could have been an instant restart. But certainly from 120.97 to 103.54, 17, that's almost a 9% correction, right? That right there, that's the deepest correction that it had. It's the deepest correction and longest that it had since back in 2012. So absolutely, this could be F, and the MACD went across negative. Stochastic went negative, still under 80%. So absolutely, this could be a brand new A. But I'd rather call this C and be ready for anything, because it could go C, D, E, and then it could still go F. That can take its months. This could take us to May, June, who knows? So I prefer to do that, because if I call it A, the implication is I'm looking at the entire year, probably, before I make a top. And I don't want to be in the position of missing a count of D, which would be B, let's say, and here I am waiting for C and D. D is preparing me. It's saying, hey, you've got a very legitimate case to start looking at this as if you're making some kind of a top. So that's what I want you to do. And you've got the, I discussed this before, spent a lot of time before my subscribers. I made a big thing out of this weekly and monthly IWM chart, and I was showing that this is a reverse or an inverse handle and cup. And my experience with this, I haven't done a big study. Bukowski's done a study, probably, but I haven't. But says that very often you will stall very close to the previous left side lip, of this case 120.58 and 120.97. Now we've made a high of 121, what did I say it was? 121.38. And that's saying, I'd say between 121 to 122s, somewhere in there we might find that you make some kind of a top, maybe 123, but you're getting close, and then you pull back, and it's the pullback after that that is going to be really important in the weekly chart. But if there's a spiral into the 124.5, 125.5 area, a close on a weekly basis, I have to consider that you're using the magnet of this dashed up channel line, which is also a Chapman wave inside track target zone, which was hit. And that says, hoo-hoo, be careful, because it's a rising trend line. 122.20 is now. Next week will be 122.30 or 40. So it's rising. If it snaps through that, that's very positive action. So now I want you to do this. So the TLT, holding very well, says money is coming out a little bit of the stocks and going into bonds, or they're just dividing. There's a group for years now that has just looked at bonds and said, hey, it's the safety I want. I don't care what anybody's saying. I don't care where this market goes. I want the safety of bonds, and I want it for X amount. Then there's another amount that maybe the very same group or person is saying, hey, I know what's going on. I'm not dumb. I am going to also put money to work in the stock market, and I'll swing between the two in different periods, okay? And then there are the people that are talking about shorting the TLT bonds for who knows how long, and they just did not hear the message of the market. Well, it wasn't really the message of the market. It was the message of me talking about this back in from the 1990s into the 2000s, all the way through. Anybody who's been listening to me at TFNN knows that for at least as long as I've been here, over 11 years, I've been talking about the Japanization of our bond yields. In other words, taking our yields and turning them into no interest whatsoever, so that it is almost a minus when you're done. And you can't fight that. It started in Japan as a concept. They didn't do it on purpose, but it was a concept of keeping rates low, and then it became a self-fulfilling prophecy. And in a sense, the Fed, this complete difference is that Japan, the Nikkei made its major market top at 39,000, 38 something or 39 something, I just can't remember offhand. back in the long week. That was the New Year's Day weekend of 1999 going to 2000. And that was it. And then it had a rally since then, but that was a major, major top. We've seen something completely different. In 5 years, we went from a low in the 6,500s of the Dow, and we've gone to the 16,000, 17,000, now the 18,000s. Big, big difference. But the Fed thinking is slow thinking. And that's important. Okay, now I think the only two aspects I want to look at right now. High-grade copper, nice bounce today. I'm calling it a bounce, and as I said yesterday, it's the first attempt in the candle that I can see that is saying, hey, I'm trying my best to form an H pattern, a successful H pattern. If I take out, this is the continuous contract talking, if I take out 2.9, let's just say I can close above 2.91. That's really important because it suggests that immediately I should be trying for the 2.94 area. If I start to fail, this is high-grade copper talking, if I start to fail, be careful because I'm going to retest the low of 2.756 made yesterday, and if that's taken out, that monthly chart, not only does it get uglier, but it just says, don't wait for me. I'll be coming on very late, very, very late. I think actually it's getting ready for some kind of bounce. And I must say, I've got to put this together. We did start adding a couple of short positions today. I'm not sure if it's going to work. One is not working right now, and the other is working. All right, that's the way it goes. And we'll see, because when I look at the commodities, and I try to put it together with the dollar, which the dollar really has been the kingpin for this is the first period I've been talking about the dollar, and I agree that it's king dollar at this particular point. That candle that I'm looking at in the weekly chart, that doji and leg D, yep, the MACD is great, the stochastic's very good, on-balance volume is starting to fail, and the relative strength is starting to fail, but at the same time, I shouldn't have said on-balance volume. I meant the relative strength is starting to fail. I do not have volume here, so I couldn't have on-balance volume. And the daily is saying, okay, if you pull back from the 89.91 level you're at right now, having made a high of 90.32, if the dollar pulls back and closes under 89 at any point in the next 3 to 4 sessions, it's saying, hey, be careful. Because 88.69 is the 9-period exponential moving average on the weekly chart. Watch that closely. And at the same time, watch gold, because gold, for the very first time, has had rising highs and rising lows in the weekly chart. That has not happened for a very long time. You've had one single move to the upside for leg A, and then it goes A minus because it fails. So, yes, there is a chance right here that maybe I'm looking at something a little bit longer in the correction period. Maybe I'm wrong. And I'm wrong if the Dow at any point takes out 17,600 to 500 support in this particular move in the next week or so. I think it's just a mild pullback. Then it goes higher. So that means a lot of responsibility on the dollar and its corrective phase right here in the very short term. Actually, it hasn't even started correcting. I'm calling it a corrective phase with a stochastic at 91%. That really is important. Okay, I think we've done a whole chunk of things that I wanted to do. I'm not going to get into that. I'm not going to get into that. Oh, question. Berkshire Hathaway. This is a great question. What about Berkshire Hathaways? And, of course, there's a lot of talk about the monthly charts. Look at this. Berkshire Hathaway, the reason why I wanted to bring it up, because Berkshire's in everything. Buffett is in everything. You name it, and he's in it. But he isn't in the stocks, per se. He's in the companies. In other words, a mutual fund will buy the shares. It has no idea. No, I shouldn't say it has no idea. But the price of the shares is not running the business. Buffett and his managers are leading the businesses, whether it is mattresses, whether it is furniture, whether it's insurance, whether it is, McDonald's or Coca-Cola, one of those. It doesn't matter. So he is investing in America. I like to look at it that way. And therefore, this is a very, very important stock. Now, you see, there's something I love doing. I'm going to do it now. you see this little arch formation that I'm going to draw in here from that top right there. I'm going to just do it like this, and then I'm going to join it like that. I'm putting it right there. That cup formation, I call it an arch, it's a cup formation, is essentially looking like this. And when you get matching time frames in these horizontal moves, let me see if I can do this. That'll be a little bit of a study I'm doing for you here. From there to there, make it a color, make it green. Let me just see if you can see that. Yep, green. And then new parallel, make this one blue, make this one purple. I didn't really want purple. And you put it in like that, and it says, okay, you haven't matched the right cup formation. It really has to go back further, and it probably has to go back to there. So let's see, put that there, make that there. Copy it, new parallel. Make it a different color. Make it color is pink. And now we'll put this one in. And I suspect that we're getting close. We're getting close to at least what I can consider a measurable. There it is. Okay, so we've extended by 2 bars. But you can see that if you can get the rhythm of this cup formation and the pullback, and then the rhythm of the next, it says, as a guideline, we're starting to get a little toppy. But the stochastic is confirming the rally. The MACD is confirming the rally. It's going to take a little while for them both to turn down. So far, monthly chart says, what are you worrying about? Yeah, we're bumping into resistance, etc. But wow, this is a good chart pattern. So you say, well, then I better go to a shorter time frame. So I'm going to the weekly time frame of BRK.B, Berkshire Hathaway. And lo and behold, we get to 152.94, and we make a choppy whoop, whoop, up and down, and then you go sideways. That sideways action says to me, with the stochastic at 88% and just crossing over positively, but almost ready to give it up, and the RSI a little bit lower, and the on-balance volume making a kind of a double top here, says this is a period that's really important for 2 reasons. One is, if Berkshire Hathaway is able to climb into the 154, 155, 156 area, doesn't even have to hold there. If it's able to get there, and the monthly chart becomes not G, which, and I answered someone in the den to say, in the thousands of charts that I've looked at, tens and tens of thousands of charts that I've looked at in monthly charts over the years, very rarely do you get G. You do get it, but it is rare. Invariably, you can go back and say, no, I've recycled, and now this is really a C and not a G, and we should go to a D. That's what I think is happening in Berkshire right now. So this is a high-level consolidation. My suspicion is it's going to go a little bit higher to rename this as a weekly chart leg B to get into concert with the S&P. And then we'll be looking for a C and a D, and that would stall somewhere in the 155 to 157 area, somewhere around there, maybe a tad higher. That's number one. And then we're looking at a darn sharp pullback, and it takes you below 148. That'll be the sharpest decline it's had in quite a while. But this time it could last a little bit longer before we get that big move later in the year. After all the guys that have been talking about, who've been bears and bears, and now say, oh, yeah, I can see the economy improving about 6 to 8%. I think this is like, or what's the market, 6 to 8%. Everyone's talking about a 6 to 8 something or other. And they all just negate that and say, no, I think this could be the serious sell-off because it's over 12% in the market. This is the one that comes into February-ish maybe. And then after that, we start another move to the upside. That's the move where the skyscrapers and the automobiles and the mega trends really appear. Whew, exciting. I'll be back. Dow's down 53, S&P's down 6.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and so let me just do this because we've got one segment to go, and then we've got a great options show with Chad coming up, so stay tuned for that. Let me just do a couple of things here. We spoke about Berkshire Hathaway. This pattern that's forming here, a little kind of a cup and a handle, is a pattern that says it'll probably go to a new or test the 152.94 all-time high that was made back on the 8th of December. Is that correct? Yes. And what happens after that is going to be really important because there is two things are a potential. One is you can get a one-to-one extension as this becomes a fulcrum pattern right here. I'm circling it in the daily. And all I can say is that a break above 153.40 says, okay, be careful, because we're going to go right into the 154.55 area. Now, what we're also looking at is the resistance in the monthly is up at the 158 area. So that's leaving a lot of room. Let me get rid of this because I just wanted to discuss it. I didn't want it there as a guide or anything. I'm going to get rid of that line right there. Move. So, okay. Now, that monthly high-level consolidation says sometimes you don't go very much higher. This is a weekly chart now, and very much doesn't mean to say you can't even go to the 153 or 54. But you've got to be very careful, because if it hasn't recycled to new leg F/B, and in fact the stochastic at 88% is actually moving down to 83%, that says that that fast-moving average of the MACD has a lot of responsibility. And while it will hold the stock up, it's not going to say that it's able to make new highs if the stochastic's failing. So what happens over the next 3 to 5 sessions in Berkshire Hathaway is probably market meaningful. So let me get that out the way, give you parameters. Under 149.50, it says be careful. And over 153.30 says nice action, should keep going that way. Okay, now let's go to the VIX index. The VIX index is up 64 cents at 15.70, struggling at the 9-period exponential moving average. It had that single leg A in failure pattern, well, so far a failure pattern, in the daily going from 11.53 in one move, it went to 25.20. That was huge. And that was the most recent consolidation we had in the market. And that's suggesting to me that, no, don't get caught up in the daily right now. Forget about it. Daily doesn't mean that much. It's the weekly chart. So if on Friday, at the end of the year, and the end of the week, if the VIX index is over 16.80, somewhere in the 16.80 plus area, that's going to suggest that the pullback that I'm looking at will have us pull back a little bit sharper, and the Dow will go a little bit deeper, and then we're going to get an inside buy signal that goes peak A, peak B, underneath this peak A, which was made at 18,000, was it 103 or 5, and it'll take time. And what it'll say is we're stretching this out, and the weekly charts will suggest that the rally can go into the into the third week of January. My outlook right now says that we've got an all clear, a shaky but all clear sign going into January, mid-January, maybe the third week of January, maybe even the fourth, I'm not sure yet. The sell-off that comes after that is going to really shake up a lot of people who have been talking, who have become bulls and convinced now that we're going up. And that pullback is going to be the one that sorts out the new sectors from the old sectors. And hopefully in my opening call, my newsletter, we are starting to pick up on what I think will be the new sectors for this coming year and what will be the old sectors. Who knows? We'll see what happens. So with that, hope to see some of you tonight at the Boston Investors Group meetup, the annual meetup, the party meetup at MIT. Go to the front page of, go to my newsletter. Don't get on my newsletter because if you want to subscribe, go to the Boston Investors Group link and we'll be able to get the information. See you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.